Let me start recording now. Okay, yeah. So let me put this side by side with our chart, right? Let me put these two side by side so that we can try to see if we can identify any of these candlestick formations. Let's see if we can identify any of these candlestick formations on a live chart. Yes, the market is closed over the weekend, but at least we have the most updated price information as of when market closed yesterday. So, like I said, a recap of a candle, we have bar candles that look like this. We have Japanese candlesticks that look like this, and we have a line graph. But most traders out there use the Japanese candlestick because it is very easy to understand, easy to interpret. Looking at it graphically, you can pick your high lows, you can pick your open, you can pick your close. It's very easy to interpret. So there are some candlestick formations. When you see those candlestick formations, when you see it occur, it is a very good indication that there's going to be a change in the direction of the market. It doesn't always mean that there's going to be a change in the direction of the market. It just means that when you see this, there is likely to be a change in the direction of the market. Now, the market can have three directions. It can be bullish, it can be bearish, and it can be, sorry, let me add this person. It can be bullish, it can be bearish, and it can be sideways. So when you have a bullish market, Bolaji, how are you? Okay, I can't hear Bolaji yet. Okay, so if you have a bullish market and then you see any of these candlestick formations, it is, like I said earlier, an indication to the fact that the market can either temporarily go sideways, temporarily come downwards, or, sorry, we're having someone else joining as well, is an indication that the market can, after going up for a while, and you see those candlestick formations, is an indication that the market is about to change its direction. Now, that change in direction might be long-term, it might also be short-term, and it might not even change direction at all. Sorry, who are those guys in the waiting room? Admit. Okay. Okay. So if you look at the left of my screen here, you would see a list of some of those things. They are, if you go to some Forex books, they might label them differently. Different schools of thought have different names for these things, but basically they perform the same function. The first one we have is a spinning top. That is the open and the close of the candle is very close together. You can see this is a bullish candle, this is a bearish candle. The white one is bullish, the black one is bearish. The white one opened here and closed here. The close is very close to the open. Also for this bearish candle, it opens here and closes here. The close is also very close to the open. The closing price is also very close to the opening price. But you can also notice that the highest recorded value for that candle and the lowest recorded value for that candle is very large. If you look at the relationship between the body, this is called the body of the candle, and this line above is called the wick. You can see that the wick is at least twice the length of the body. it is under such circumstances that we can say we have a spinning top. Now, let's quickly look over at the chart on the right-hand side of the screen. And let's see if we can identify any spinning tops. If you look at where the crosshair is, right here, we're looking at Euro USD. If you have the chart maybe open on a laptop or on your phone, you can also want to look at it. That is 8 a.m. 21st of April on 4 hours. The candle that formed there, if you look at it, let me zoom in a little bit. Where's my zoom? If you look at this candle right here, can you see it? Yep. That candle, the spinning top, you can see it's pretty much like what you have here. And if you look a little bit closer, you can see that market was in a little bit of a downwards move. We had this spinning top here. And after the spinning top, you can see that the market went, had a brief bullish run. At least for the rest of that day, market was bullish. You can see that. If you look closely, we can see another spinning top here. Can you see it? That is on the 22nd of April as well. 12 a.m. You can see there was a spinning top. And the very next candle after that was bearish. Although it did not lead to a full bearish move, the next candle after that was bearish, but it continued. Like I said, when you see this candle formation, it doesn't always mean that the market is going to change. That you need to consider it with other factors also in the market before taking a decision. The next one is a doji. It's called a doji, or in some places it's called a hammer. That is when the opening price and the closing price is the same, but then you have a very long peak. Let's see whether or not. Also, the doji, this doji or the hammer, like I said, different books or different literature might call it a different thing. It doesn't occur so often. It's not.
So, please, could you come again? There's this distortion stroke echo that's happening, so I can hardly hear you.
Okay, which part do you want me to repeat?
The doji and the hammer.
See, tell everybody to mute. Your voice is echoing because people didn't mute. Okay. So once everybody mutes, we can hear you much clearly.
Okay. Okay, I think you should be able to hear me better now because I muted everyone. Okay, now, what I said is that the doji now, if you look at the left of your screen, the doji, you have the doji when the opening price and the closing price is the same. It opens, you have a lot of activity, maybe it goes up and then comes back down and then closes at the same price. And then closes at the same price it opened. That is when you have a doji. A doji doesn't occur so often, it's not one of the most frequent, but it's actually one of the most powerful. When you see it, it usually indicates a reversal in the market. It usually indicates that the market is going to turn around. Now we have the white Marubozu and we have the black Marubozu, which is basically what you have here. It's pretty much a bullish and a bearish candle. Then we have a variant of the doji, which is the hammer. Like I told you that there's some people call it the hammer, some people call it the doji. Now the hammer occurs, let me zoom it in so that you guys can see it well. Although all this information is available in the group, so you can go and look at it better. Can you see the hammer here? It is when the market, the opening price and the close price is almost the same. Not always will it open and close at the same price, but it's almost the same. And then you now have a long week, meaning that there was a lot of activity on that candle, but it could not continue in the direction of the trend. You can see in this example in the exercise book, you can see that there was a strong bearish trend. But when it got to this candle, it tried to continue with that bearish trend, but the market could not sustain that bearish trend, and it reversed and pushed back and closed to the opening price. When you see that either at the end of a bullish run or at the end of a bearish run, you can be rest assured that there is going to be a change in the direction of the market very, very, very soon. Let's look at examples of the hammer here. Okay, can we see this? This is also on the Euro USD. This is on the 13th of April at 8 a.m. You can see there has been a significant upward move in the market up until right around this point where the market was a little bit sideways. And then, boom, we have this hammer. We can see that it tried to continue in the upward momentum, but before the candle closed, that upward momentum was reversed, and it closed and the closing price was pretty much near to the opening price. And you can see what happens after that. Sorry. You can see what happens after that. We had 1, 2, 3 consecutive bearish candles. So it's real. It's very practical. It's something that you will see. Okay, look at a great example here. You can see that we have a bearish move coming down here, and then we have a hammer here. The next candle was bullish, but it still continued in its bearish run. And then we have another hammer here. And then you can see that the market now continued in a more traditional bullish run. Now, we'll still get into that later on how you can combine these candlestick patterns with other trading habits that will make them more effective. That basically will tell you that this particular hammer is not going to have that much effect in the market, whereas this particular hammer will have a stronger effect in the market. Another thing about candlestick patterns is that the bigger the candle, the more powerful it's going to be. If you see a very small hammer, then it will have a very small effect in the market. If you see a very big hammer, then you can be rest assured that it will have a bigger effect in the market. Now, we have the next one, which is the hanging man. That hanging man is pretty much just like a hammer, but in the other direction. Now, if you look at this hammer, you can see that you have a bearish move, bearish move, bearish move, and then an exhaustion of the bearish move, which now led in a bullish move. You can see, but in this example of the hanging man, you can see that it was a bullish run, bullish run, bullish run, and then it tried to start a bearish run, but that bearish run was also, how will I say, it was also terminated. The close price was pretty much close, was pretty close to the opening price. Therefore, it signaled that, okay, market is trying to go in the other direction. Market is trying to turn around. So that's pretty much it. The inverted hammer is, like I said, if you look at it, like, as I mentioned earlier, they use the terminologies interchangeably. You can see that the inverted hammer here is being, okay, if you have the hammer is in a bearish, when you have the bearish momentum, inverted hammer also bearish momentum, but it looks pretty much like the hanging man, but in the other direction. So it depends on the terminology that the book you are using uses. You can see the shooting star is also pretty much like the hammer, but also in the opposite direction. The shooting star, you have that in a bullish move. The hammer, you have that in a bearish move. I hope you guys are okay with that. Any questions before we move into the next set of candlestick formations? You should have questions. The assignment I gave you guys, a few of you tried it and you actually did quite well, which encouraged me that at least you guys are understanding what I'm saying. So it's not like I've been talking to myself since. I'm actually glad that some of you tried it. I'm still going to give you some examples today. So I encourage all of you to also try your hand out of it. Try your hand out in it. It's not compulsory you get 100%, but just to get the experience, that's all. Okay, now we have looked at candlestick formations that involve just one candle. That is when you just see that singular candle alone, you can start to think about the action you want to take. But there are some candles that exist together. Not just one candle, then you need at least 2 or 3 candles to confirm that this particular thing has happened. The first one is when we have a bullish engulfing candle. A bullish engulfing candle is when a candle, you have maybe 1, 2, 3 bullish candles, and then the very next bearish candle is the same size or bigger than the last 3 candles. Let me repeat that again, because this doesn't actually depict it very well. You have one candle bullish, the next candle bullish, the third candle bullish, then the fourth candle is bearish. But that fourth bearish candle, the size of the bearish candle is bigger than the last 3 candles. Let me show you an example here on the screen. If you look at the screen here, you can see from here, 1, 2, 3, 4, 5, 6, 7, 8. The last 8 candles was pretty much going in a bullish direction. Although there were some bearish candles there, like I said, the market doesn't go in a straight line. But you can agree with me that from this point to this point, the market was generally bullish. And then the next candle, you can see this candle engulfs. That means the size is bigger than 1, 2, 3, 4, 5, 6, 7, 8. It's bigger than the 8 candles together. You can see this candle started here. Let me just put in a line there to make it more visible. This candle started here. This is the lowest range of this candle. Hello? Okay. This is the lowest range of this candle, and this is the highest range of the candle. And you can see that this engulfing candle takes out all those candles together in one candle. And what do you notice? You can see that it's signaled a bearish run in the market that was terminated by this inverted hammer, or by the hammer. So you can see that it works. These are actual real life practical things that you can see in the market. And I'm just looking at one pair. If you go to other pairs, if you go to the GBP USD, you go to the Euro JPY, gold, whatever, even crude oil, when you go there, you will see these things live in the market. Anytime you see any of these setups, just be let me say, be more sensitive, because the next thing you should be seeing is a change in the market direction. The same thing with a bearish engulfing. The example I actually gave you is a bearish engulfing. The same thing happens with a bullish engulfing. Let me just scan through and see if we can see an example of a bullish engulfing candle. Okay, let me go to gold. I think we had a bullish engulfing in gold recently. Okay, yeah, this is a good example of a bullish engulfing candle. You can see the last three candles, the last 1, 2, 3, 4, 5, 6 candles were pretty much trading within the same range. They were trading between this range. This is the upper limit of the range. This is the lower limit of the range. And then this candle breaks out and takes out all the other candles before it. And you can see from there on, market went bullish. That's a bullish engulfing candle. So any questions before we go to the next?
Hello, can you hear me?
Yeah, Tunde, we can hear you.
Oh, okay. Yeah, sorry, I joined the class a bit late because of network issue.
Okay.
Yeah, the one in white, is it the bearish? And the one in green, is it the bullish?
Is it
That's
on
my
my chart or on the
chart? On the chart.
On my chart.
Yes.
On my chart, the black one is bullish. The white one is bearish on my own chart.
The white one is bearish, right?
Like this candle, can you see my screen?
Yes, I can.
This one that my mouse is on right now.
Yes.
This one is a bullish candle, where this one, this white one, is a bearish candle. Yeah. Okay. So the next one that we have now is tweezer tops and tweezer bottoms. Like these two I'll take together, just like most of the other ones you will see. There's just the one happening in a bullish environment and the other one happening in a bearish environment. Basically, a tweezer top is when you have two hammers together. You have a hammer followed by another hammer. Usually one will close bullish, the other one will close bearish. When you see that, that's a very strong indication that the market is going to change direction. It's not very common, but let me see if I can get if you can see what is happening on my screen here, you can see that this is a doji. You can see the market was bullish. We're looking at gold now. You can see the market was bullish, had a doji, a bearish candle, another doji, and the market went down from there. So sometimes you will get this, it's called a confluence. You will get maybe 2 or 3 of them together. When you see it like that, there's always a likelihood for the market to change. Don't have any. Okay, maybe I'll just look through my charts and try and look for examples for tweezer tops. Then I'll tweezer tops and tweezer bottoms, and I'll send that to you guys in the group. Like I said, it's not very common, but when you see it, it's very, 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 very powerful. When you see the two of them together, either at the end of a long bullish move or at the end of a long bearish move, you see two hammers occurring together. That means the market wants to change direction. Okay. Now you can see, now this example that we can see here now is for 3 candles. You know, tweezer tops is 2 candles. Engulfing is 1 candle in relation to the last candle, few candles before it. But for this example, you need to see the 3 candles together. Let's go back to gold because there are a few examples I saw in gold recently. Okay, that is when you have a 1 bullish candle followed by a very small doji. And after the small doji, you see a candle in the opposite direction. Sorry, I saw something like that. Okay. Well, I'm being warned that we have 10 minutes left in our class. Okay, so let me just okay, can we see this? An example of a morning star. You can see there was a bearish move in the market. You had a bearish candle here. They have something like a doji, small doji. You can see the size of this candle is smaller than most of the other candles that have come before it. And you can see the very next candle after it is a bullish candle. So that represents the morning star right there. You can see that market came down, and after those 3 candles, the next 2 candles were bullish, and the market actually made it did quite a bullish push after this. You can see after this, you can see the market went bullish. So, like I said, these things are practical. You can by now you should have installed the application at least on your phone, so you can go back and actually check out for some of these things. The books are already in the group. So just look for a particular pattern and go to your charts and see whether or not you can identify the patterns, and then see what happened after those patterns. So we will be having another class later today, maybe sometime between 4 and 6. I hope that time will be okay for everyone. So at that time, we'll now see how you can now interpret these things to to even have better accuracy. That is when you now start considering support and resistance. Whenever you see these things at a support or a resistance, it is usually more powerful. When it happens in a place called no man's land, that's in between a support and a resistance, market is really nowhere. Nothing really happens around that period. But when you see it at a support or at a resistance, know that something significant is about to happen. So from there, we'll now move into support and resistances, how you can calculate your support, how you can calculate your resistance. You have your horizontal supports and resistances, and you have your diagonal support and resistances. That is when we go into trend lines and things like that. And then from there, we'll now start looking at how we can now start determining the trend of the market, the direction the market is going to go in, and how we can now execute trades and to follow in the direction of the market. So hopefully, I think we should be able to cover all of that in the next class and the class after that, which will be on Sunday, maybe Sunday evening. Someone like me, I used to go for home fellowship on Sunday, but you know our Sundays now, no going out, no going to church self. So at least Sunday evening, we should have a little bit more time. So before I end it, before we run out of our 10 minutes, any questions, any Any observations? Anything from anyone? Any questions?
For now, nothing really, but we still need more clarification on the movement of this chart. So one other thing I also like you to help us with was the assignment. It's a bit difficult. I was able to go through some online. Didn't really get the answers precisely. Maybe you should give us the answers to that, so to help us better understand that topic.
Okay, you said that I should give you guys some examples for you to practice with, right?
I said regarding the assignment, we need solutions to that previous assignment.
Okay. Oh, sure. I would drop that. I'll drop the backing scheme. I'll drop the backing scheme. Later, you people need to come and buy handouts. Okay, now that's a good suggestion. I'll take that. I'll put that in the group.
Okay.
Yeah, Isaac.
From my end, I was reading through stuff, and you talked about the leverages, talked about the spread.
Yeah.
But you didn't mention anything about margins.
Oh, okay. I didn't. Okay.
Yes.
Okay. Well, I'll let me see if I can squeeze that into the next class. Okay. Or if not, I'll just do a write-up, or maybe I'll just record a small video and post to the group on that.
Okay.
Yeah.
Okay.
All right. Any more questions? Let me just jot that down, actually. Marking scheme. Hey, you guys are telling me to lecturer. Mr. Lecturer. Hope there's no babe in this class. Because what Nigerian lecturers used to do with babe. And then margin, right? Okay. All right, so like I said, anytime between 4 and 6, I'll give you guys a heads up. Sorry about today, I lost track of time. I actually said, let me just quickly go and dry some clothes outside, and then I lost track of time, and sorry. So today, at least 1 hour, 2 hours before time, I will give you guys a heads up on that. So wish you guys all a restful Saturday. We'll see ourselves later today. Thank you.
Thank you.